All right, guys, let's learn something today. Let's find out how the Saudi-Russia standoff sent oil markets into a panic on Monday, because not only did it dominate the headlines alongside the coronavirus to start off the week, but a lot of followers and friends called me up asking to please, James, explain the situation to me. So here you go. How did a Saudi-Russia standoff in oil send markets into a manic mess? Well, oil prices, that is, into a manic mess. Well, remember the following, that there has been two constants in oil prices as of late: higher U.S. shale oil production, and number two, the alliance between Russia and Saudi Arabia, which has been working together in raising and or cutting production at around the same time. Remember, these two nations, Russia and Saudi Arabia, mostly worked in tandem and were looked at as best buddies until now, because Saudi Arabia, the key head member of OPEC, last week proposed production cuts to offset the collapse in demand from the coronavirus. Russia, which is not an OPEC member, refused to go along, and that disagreement turned into open hostilities. Now, after speaking with OPEC in Vienna, Russia's energy minister Alexander Novak returned to Moscow for consultations last Thursday. And during his trip back to Russia, in his absence, OPEC met up again, and they came up with an ultimatum. The group as a whole would cut production by 1.5 million barrels a day, about 1.5% of the world's supply, and OPEC, mostly comprised of the Saudis, would make the bulk of the cutbacks, 1 million barrels, as long as Russia and other producers trimmed their part as well. Well, they didn't ask Russia if it was okay, and Russia wasn't even at the table. And how do you think Russia perceived this move? The Saudis looked to make the decisions for everyone, and as expected, Russia did not play along. The answer was a stern no, and the Saudi oil minister, Prince bin Salman, and other officials headed back to their hotels with no results and no communication. So there was a standoff. OPEC and OPEC Plus, that's a wider group of producers, they failed to agree on new cuts, and they also failed to sign off on an extension of 2.1 million barrels per day in previous cuts that would expire at the end of March. Overall, a lack of communication meant the following: tensions between the nations and a possible tremendous flow of oil coming onto a market that was already hugely oversupplied and experiencing a steep drop in demand. And the market was scared off by this potential surge of crude. At one point on Monday, prices, they were down by more than 30%. So there you have it. If you're wondering why oil took a hit over the weekend and why Saudi Arabia and Russia were in the headlines, the answer is pretty simple. Playing Russian roulette in the oil markets can be pretty dangerous. For Modern Wall Street, I'm James Swinney.